Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Tesla. It seems like we've been talking about Tesla almost every video, but Tesla's been very interesting lately. It's been very interesting to follow. It's very interesting to see what's going to happen. Now, it's no surprise to you guys if you watch me that I am quite bearish on Tesla, even though I do hold a position. My initial investment was about $5,000. I'm probably down about 30% now. I explained that in my other videos, how I got caught up on that. So it's no surprise that I'm kind of bearish on the company. But this local, or this recent attention that we've been getting in the stock, it's really piqued my interest. So, I mean, unless you've been living under a rock, you've basically seen the downgrades coming in for Tesla. And it's really kind of interesting to see the lemming effect, right? We've seen downgrade after downgrade after downgrade, right? And it kind of starts to get to my attention when you see them all following suit, because I've seen the same thing happen with Apple. It almost seems like, sometimes they just want to drive the stock down. And taking a look at the stock right now, we can see that it was just hammered again today. It was, it looks like after hours is dipping below 190. So what I'm going to be giving to you guys in this video is I'm going to give you my thoughts on this. I'm going to give you a little news on what happened very briefly. I'm going to let you know whether I'm going to be adding my position and why or why not. So the one that really got my attention was there's been a bunch of downgrades. One was $36 and one was $10. Now, what I find so interesting about that one that was $10 is it is so, it is such an outrageous number. It reminds me of the downgrade that happened from Citron. Andrew left. If you haven't seen that video, I'll put a link right here, right now, regarding Village Farms. So, but anyway, let's get into the article here and we'll see what this guy said. So after Tesla's stock slumped to its lowest level since December 2016 on the back of bearish analyst coverage on Monday, Morgan Stanley chimed in on Tuesday, slashing its worst case Tesla share price target to just $10 US, and this is from $97 US, in case the US-China trade war hits EV maker and dampens significant demand for its cars on the Chinese market. According to Morgan Stanley analyst Adam Jonas, the key drivers to the bear case downgrade are a worst case outcome of the trade war and rising doubts at Tesla. According to Jonas, Tesla's sales in China could generate as much as $9 billion between 2020 and 2024. But if China were to hit Tesla with tariffs and restrictions amid an all-out trade war with the US, Tesla's potential Chinese sales could fall to half that figure, which could erase $16.4 billion of Tesla's market capitalization. Our revised case assumes Tesla missed our current Chinese volume forecast by roughly half to account for a highly volatile trade situation in the region, particularly around areas of technology, which we believe to run a high and increasing risk of government regulation attention, Jonas said in a note as carried by the street. The article goes on here to talk about how they raised capital. I basically said that was going to happen. They've raised $2.3 billion through common stock and convertible bonds. So that's the gist of the $10 target. Now, if you really look into this, he doesn't give too much in terms of details. I feel like this is another scare tactic. And when I see stuff like that, that really makes me just start, wondering about what's going on. What's the value of the company, right? So I've done a video before, I'll put the link right here, about my evaluation I did on Tesla. Now, it wasn't a traditional, dividend discount or free cash flow to equity or something like that. I find that those generally aren't very accurate. I think that looking at multiples of companies, specifically PEs, are kind of interesting. And if you could kind of project out what they're going to be doing in the future, you could look at it from that perspective. So I looked at that perspective from that video, and my consensus was if, essentially Tesla took on the world, they'd be maybe $500-600 a share, like tops, right? So I was very bearish on the company then, and it's kind of come out to, it's kind of proven to be true here. But a more effective way to look at these kind of companies is something that's called the price of sales. Now, I'll do a video on this in the future, but what it is it's the market cap divided by the sales. Same thing, you could also do it the share price divided by the sales per share. So you're getting a multiple of how much you're paying per dollar of sales, right? So if we take a look at Tesla, they have 177 million shares outstanding, which isn't a lot, right? They're going to have to continue to issue more, I believe, but it's still a relatively low number. Their market cap has been hit significantly, $34 billion. So, I mean, it's still a massive market cap, but it's not so ridiculous now. Price to sales is about 1.51, and we're looking at a forward PE of 32. So it's starting to become a little bit more attractive to me. Price to sales, generally speaking, you know, the rule of thumb is if it's under $1, it's a good deal. So this is higher than that, but compared to other companies, like even look at companies that are, you know, maybe not the same type of company, like Apple, I think is at 3, AMD, these ones are at like $3. High numbers like that. Now, I mean, I'm making the assumption that they're all the same kind of company, which they're not. But my point is, it's for a tech company, it's actually not that rich anymore. So I like to look at it from this perspective, and it's kind of got me interested in adding a little bit because the stock's down like 40-some%. Additionally, there was news that came out that actually Apple was interested in Tesla. I think it was back in like 2012 or something like that, and they were looking at like $230 a share. I don't think Apple's going to buy them, but this does make it, the market cap dropping, more attractive buyout target, right? And if you watch my other video on the Autonomy Day, I think that the technology there is very interesting and it's very complex what they've got going on, and I believe there's a lot of value, a lot of intrinsic value. So when I look at these numbers, I think that you know, Tesla is kind of at a point in their share price where the intrinsic value is actually probably much higher than this. So that's what's making me think I should add, even though I'm down so much on my other one. So what I'm thinking of doing, I'll put a line here, is I'm thinking about getting it at 180. Not too sure if it'll drop that far, but to me that seemed like a good number. We're not far off there. That'll give us a market cap of about $31 billion, and then we're under $1.50 price to sales. So that's my thoughts on Tesla right now. I wanted to put out a quick video to you guys just to kind of give you an idea of my thoughts on it. This price to sales, don't take this as the end all be all, okay? Like, this isn't my absolute favorite. One reason you might see a low price to sales is if the market's basically discounting a stock or the stock's tanking because they're worried about debt. It can make a nice price to sales ratio, and that can potentially be the issue with Tesla. I still am unsure whether or not they will eventually go bankrupt or not. However, I thought years ago that they might have, but I think they've got a lot more room to issue more shares and stuff like that, and I think the intrinsic value is there. So that's why I'm doing what I'm doing. I'd love to know what you guys think about it as well. We'll see if it hits 180. I hope it does, because I think this is a phenomenal opportunity, and that's what I'm going to be doing, just my opinion. And that's going to be it for today, guys. I'll see you in the next one.